Greetings and thank you for joining us at futuremoneytrends.com. I have a very special interview for you today because I think 2016 is going to be one of the most profitable year for investors, specifically precious metal investors who are looking for very strategic investments, partnering with the best people. Our next guest runs one of the premier gold companies in the world, and I say that because he's received big endorsements from heavyweights like Doug Casey, Rick Rule, Marin Katusa. Many of you listening to this have purchased shares of this company at 50 cents. And in the past 3-4 months, you've seen the shares rally past $1 to over $1.50. And I think, in my opinion, they're going a lot higher. But Rick Rule, even more importantly than what my opinion is, was recently on BNN, which is Canada's CNBC equivalent. And he was asked specifically about this gold stock. And his exact words were, it's going a lot higher. The company was also featured in the Huffington Post recently. And if you're a futuremoneytrends.com member, I have a good feeling you own this stock. But the reason for our call today is because I believe the opportunity may be better than ever. It is ran by one of the most successful and relentless entrepreneurs alive. Our guest today, Amir Adnani, chairman and founder of Brazil Resources, trading on the TSX Venture Exchange under BRI and on the OTCQX under BRIZF. Amir, thank you for joining us.
Thank you, Daniel. Great introduction. I'm blushed.
Hey, you know what? You deserve it, sir. And I've got to say, I don't think anyone's ever heard Doug Casey give a stock recommendation ever on a radio show, and he did it about, I want to say, like 2 months ago. He just came out and said that he was going in big for Brazil Resources. So you guys deserve a lot of credit. A lot of people have made a lot of money. I did a conference in Houston a few weeks ago, and I had a few dozen people approach me and let me know that they were very, very happy shareholders. So we're looking forward to having you on the show today, sir. Let's get right into it. So gold did have a correction here in the last few weeks. So my question to you, and I think it's on the audience's mind, are the junior resource stocks, specifically the precious metal stocks, and is gold in a new bull market in your opinion?
Absolutely. And what better way to have a confirmation of that for all of us than seeing what just happened in the last few weeks, to basically having all lived through this resurgence since earlier this year, to see the various equities and share prices rise as gold rallied towards 1,300, and then when we saw this pullback from 1,300 all the way down to 1,200, except before today's rally, to see the equities all really hang in there, consolidate nicely. We didn't see major profit taken in any way. All of these are incredibly simple and straightforward signs of the fact that this is a bull market with with plenty of conviction that it's going higher, and that this pullback didn't phase the market, broadly speaking, and we really need to take note of that.
Yeah, I actually read this morning that despite the gold pulling back, the inflows for the ETFs and for physical was still rising. Amir, BRI, Brazil Resources, has been acquiring assets throughout the entire bear market. Essentially, you IPO'd at the top of the market in spring of 2011. You've been making acquisitions the entire time. Built up a tremendous amount of gold ounces and gold resources, in the ground. Where is BRI today, and what are your plans for the next 1 to 2 years? Because we're likely to see a much different climate for gold and gold stocks.
Luckily for us, then, as you point out, having started life as a public company in mid-2011. Basically, by late 2011, we had the beginning of this multi-year bear market that we witnessed up until end of 2015, early 2016. And so it really gave us a great window, basically a multi-year window, to be able to patiently, using the slow cooker approach, to pick up assets that we just felt very comfortable with, and that we didn't have to rush anything. So we really got lucky to some extent that we came to life as a company when we did in mid 2011. And again, without having to rush, having to do various transactions, again, we were able to find these various opportunities. So today, where we sit, and you look at our portfolio in Brazil, you look at the portfolio of the projects we have outside of Brazil and Alaska, with the Whistler district, there's a total of over 3 million ounces of gold resources in the indicated category, 7 million ounces in the inferred category. So a total of about 10 million ounces of gold in all categories in the ground. These are the 43-101 compliant resources. And in terms of just, the replacement value is enormous. When you think about just the amount of work that has been done here, probably close to $200 million worth of work just to replace all the drilling and exploration and engineering work that has been done on these various assets. So where we sit today, it's a heck of a portfolio. I would consider it to be probably top 10 amongst all listed companies in North America. On a gold equivalent basis, it's almost 14 million ounces of gold in the ground in all categories. So something that is quite sizable, and it can give us plenty of organic growth as the market continues to get better. But I still think that there's going to be acquisition opportunities out there as well, and there's situations that we're working on.
Amir, the name of the company is Brazil Resources. Could you just briefly give us a preview of some of the strategic assets you guys have picked up during this acquisition? Because it's not really a Brazilian company if people think of it just because of the name.
The name reflects where we started life as a company, and we were focused initially in Brazil and the northern part of Brazil and Pará state, where there's been quite a bit of recent activity. In the recent sort of 6 months, we've seen companies like Agnico Eagle make further investments in this area through positions they have in other companies or juniors or directly. We've seen individuals or very successful mining entrepreneurs, people like Ross Speedy, acquire projects and raise money for development in this state in Brazil. There's been really a major currency devaluation in Brazil. And so it's become quite a bit cheaper to do business in Brazil, and assets have become basically less expensive in that country. So the resources and the projects that we have, and mainly our flagship project, the São Jorge project, is really beautifully situated next to a highway with a power line coming into the project, with this great infrastructure around it. The work that has been done and the resources that have been delineated only cover about 10% of the property that has been explored so far. It's a large property with 50,000 hectares. But you're right, we did also grow outside of Brazil. We did acquire last summer this district play in Alaska, the Whistler project, which is really it's a gold district. We have 3 separate 43-101 resources on this project. It's about 170 square kilometers. The work that has been done on this area alone is about $50 million. And you're looking at something that is obviously in a geopolitically stable jurisdiction. I really think U.S. assets have been beaten up here the last few years with the stronger U.S. dollar. It was tough to go into U.S. jurisdictions to pick up assets. They were just more expensive to do business. It was tough to do business under the Obama administration, making it tougher for the coal industry, natural resource industry. You had a very difficult EPA to deal with. So I think U.S. assets are really beaten up, really low in price. And that's why we picked up this major play in Alaska. And I think that especially with the election coming up, and whether it's Trump or Clinton, you're going to see the value and worth of these U.S. assets really improve compared to what they were like under the Obama administration. So now, between Brazil and also being in the U.S. and Alaska, these are big countries. These are major countries and very geopolitically safe and secure places to be in. And so it really just means that the inherent value of the projects is that much more important because of where they're situated.
Amir, Marin Katusa, who I honestly believe is going to be like a Warren Buffett in Canada one day, and he has stated publicly in recent weeks that BRI is one of only 5 stocks that he owns. That's incredible. Doug Casey, like I said, had said he is buying Brazil Resources, and Rick Rule of Sparta Asset Management, who, as you know, keeps his cards very close. He's not one to reveal his picks. Has been very public about Brazil Resources. In fact, going back to the Carlsbad conference, I want to say it was in April. He was speaking very highly about Brazil Resources, and obviously we've had a big run here, and these guys are strategic shareholders, the largest shareholders collectively. But what I want to kind of ask you is, with having 2 legends involved in the company, and Marin Katusa, who's an extremely disciplined stock picker, it's a compliment, but it also probably adds a little pressure. Am I right?
Well, first of all, when you look at people like Marin Katusa and Rick Rule, and the experience that they have in the resource business, investing in the resource business, these are individuals that at times could know even more about this business and the assets that they're looking at investing in than you and I will. I mean, this is what they do all day long. This is what they eat and breathe and live in natural resource investing. So, of course, these are very difficult investors to please, in my opinion, and because, again, they're extremely knowledgeable about this business. So, of course, it's an enormous vote of confidence to not only have them involved, they're involved in different companies, but to have them be very vocal in their bigger holdings or their favorite picks, etc., amongst the various things they might own. Again, it's an endorsement, but I really think it's a reflection of the work that we've done to assemble assets that in their mind have tremendous value. I think obviously at the end of the day, they've been successful as investors because they've managed to generate very handsome returns for their investors and themselves. And so I think if you're in their shoes and they recognize that BRI today has 10 million ounces of gold in all categories, and that's gold only. And as we discussed on a gold equivalent basis, almost 14 million ounces of gold. And at today's enterprise value, you could say the company is trading at about $13 or $14 an ounce in the ground. Guys like Rick and Marin can easily recognize that that's a very low value situation, in the sense that when you look at where the sector is heading towards, where other companies or companies that are perhaps more advanced are trading at, which could be anywhere from $50 an ounce and higher. And you look at M&A transactions and where Goldcorp recently acquired Kaminak, for example, where they paid almost $100 an ounce on the ground. You can see why the institutional investor base that we have, and Doug Casey and Marin Katusa and Rick Rule, see the value and are impressed with the way we've done this. But I think at the same time, they recognize how aligned insiders are with them as shareholders and other shareholders. Insiders in Brazil Resources own almost a third of the company. That's pretty impressive, Dan, when you consider for a company that's been around for 5 years now, right?
Yeah, it's truly incredible. Amir, let's talk opportunity. So I'd like to run down just a handful of commodities here, and just get your opinion, maybe a 30 to a minute response on what you think of them over the next year for investors listening today. First one is one that no one knows better than you, in my opinion, is uranium. What are your thoughts on uranium right now?
Been disappointed with uranium year to date. It's a very thinly traded commodity, and so sometimes you do have to give uranium time. And I know for many investors, they're going to say, well, geez, I mean, we've been very patient with uranium. It's been 5 years. But, 5 years of a difficult uranium market, as you've heard in commodity business, the cure for low prices are low prices. And so I really think that these low prices have really been planting the seed and sowing the seed for a looming deficit for uranium supply that's coming. And I really think that it's the ultimate contrarian play right now, uranium. It is absolutely hated. Even the true believers in the play have become fatigued And so perhaps there's real capitulation here on uranium. With the US dollar really pulling back, it was in a heck of a tear the last 2 to 3 years. Made it so much better for Kazakhstan, which is the world's biggest uranium producer, to put uranium in the market and still feel like they were getting $40 uranium, even though the rest of the world was pricing it at $30. So ultimately, the stage is set, in my opinion, for the uranium market to really have a major sort of recovery here. It's been 5 very difficult years, and it's that ultimate contrarian play right now, uranium.
Oil.
Oil. It's had a heck of a year. I mean, who would have thought from January level it would already recover to this $50 level so quickly? I still think that oil is, in the near term, has uncertainties that are more geopolitically related than supply-demand related. And I think the issues with OPEC and Saudi Arabia's desire to really assert itself more, and kind of the rising prominence perhaps of Iraq and Iran, with increasing production coming there and perhaps not wanting to be aligned with Saudi and the rest of OPEC. I think we got to look very carefully at the next OPEC meeting. You know, I spent a lot of time and have the benefit of speaking regularly with former United States Secretary of Energy Spencer Abraham, who's the chairman of Uranium Energy, a very important energy person, you know, sits on the board of Occidental Petroleum. And I think that we got to look at geopolitical developments and the next OPEC meeting very carefully before turning our attention over to the supply-demand fundamentals. But I wouldn't be surprised if we see oil not only consolidate, but perhaps even pull back a bit from these levels that we see right now.
Amir, the next one is not a commodity, but the Canadian dollar. What are your current thoughts on the Canadian dollar right now?
You know, we're an export economy in Canada at the end of the day, and so the Canadian dollar will have to really reflect the fact that as an export economy, we and as a very commodity-driven economy, we are going to be trading in line with what happens ultimately here with oil, which has huge bearings on the Canadian economy in Alberta, which has had some very difficult couple of years. Obviously, gold helps as well, but not to the same extent as hydrocarbons do. But you know, even in Canada, we're going to have to really pay attention to commodity prices to get the tone for where the Canadian dollar is going to be heading. But I ultimately expect to see the current levels probably continue to consolidate as well.
Amir, the gold price, I don't want to hold you down on a prediction, but if you had to guess, are we going to be over or under $1,500 per ounce on December 31st, 2016?
I just feel more and more comfortable that we're going to be over 1,500 potentially by the end of the year. And the dynamics in this market, I feel, are ones that we've just not seen in the last 10 years or even beyond that. I mean, I'm just referring to the last 10 years, but I just don't think any other time in recent memories have we had this dynamics with the negative interest rates. I mean, almost 30% of all sovereign bonds in the world yielding negative rates. I mean, we're just in uncharted territory. And you add on top of that some of the other factors with the Brexit and the vote that Britain has with staying in or out of the euro, the US election coming up. And it just is so reassuring to me more than ever before that we could very well be over 1,500 by the end of the year. And, you know, I'd say $2,000 in the next couple of years is in the cards.
Yeah, no, and it's amazing what's happening to these mining stocks. You know, the gold goes up 10%, the mining shares are going up, 40, 50%. Lastly, Amir, you traveled to every continent. Every time I speak with you, you're at an airport, you're heading to a roadshow to introduce investors to BRI. What are your thoughts on the U.S. and global debt levels? And I want to put it in this frame because you talk to so many different hedge funds and strategic investors out there, high net worth individuals. Are investors around the world starting to have some concern over what's going on with all these central banks, which you just mentioned, specifically the Federal Reserve, which I guess this all should be bullish for gold?
I've seen it in all of my travels year to date. I can recall very specific meetings earlier this year in Zurich and Geneva where sitting down with money managers in that country where Switzerland's own sovereign bonds are now also yielding negative interest rates. And you could, you sit down, and when right off the bat, you hear Swiss money managers talk about being now at the beginning of a multi-year, 5-year bull market for gold. You can see and hear for the first time conviction more than ever in the voice of investors and institutional investors, high net worth investors, about where we are and about the need to be in gold and increased exposure to hard assets. And again, whether it's in Switzerland, whether it's in London, it's just quite reassuring to see a very different tone, where it's not a divided camp or something where there's divided opinions on, like it was maybe in the last 2 to 3 years, on where gold was heading and the rationale for staying in gold. Even Goldman Sachs were crying out loud recently, finally caved in on this ridiculous forecast they had on the price of gold, and to etch their target prices higher. So I feel the sentiment has just shifted so unanimously towards the need to be hedged and to be focused on wealth preservation and creation, and that gold and hard assets being the way to realize that.
Amir Adnani, our guest today, chairman and founder of Brazil Resources, trading on the TSX Venture under BRI, or in the US, BRIZF. Amir, hey, thank you so much for your time. It's been a real pleasure. The whole 5 years for this bear market, we've been recommending your company, and I've seen so many investors put their money in gold stocks, and they're worthless now. And not only as BRI did it hold its value and increase real value, physical value as a company, but I think we've got to be seeing some of the best results in the entire gold sector with BRI this year, and this is really just the beginning. So on behalf of Future Money Trends and the members here, we have a lot of love towards you, sir. We appreciate your time.
Thank you, Dan.
The stock market crash brings ripe opportunities to profit for 2016. Learn more by visiting futuremoneytrends.com/smartmoney.